Well, there is a lot of news flow that's coming in positive for MCX. Institutional investors are now allowed to trade in commodity derivatives. That's a very important development for what it means to the exchange itself. We have with us the man of the moment, Mr. Mrugank M Paranjape, the Managing Director and CEO of MCX. Mr. Paranjape, thank you very much for joining us. Well, before I get to what this might mean, and it looks like it's going to be, a quantum move in terms of participation, why are you hanging up your boots? I mean, at a time when a quantum leap is waiting for the exchange, why this decision, Mr. Paranjape?
So I think, when I joined this exchange 3 years ago, it was slightly different terms of engagement, but the rules of the game changed midway when the SEC of 2018 was notified. And therefore, looking at what we had achieved, I got a feeling that at MCX we had done quite a bit. I genuinely thought we had achieved almost all what we had sought to do in these 3 years. And it was time for me to do something else. So I just decided I'll take a break from here. But yes, you're right. It's great times for commodity exchanges. And I genuinely believe that, what we've done in the last 3-4 years after we came under the fold of Sebi is really now at a shape where it'll take off in a much bigger way.
Okay. Mr. Paranjape, good morning. And whatever are your future endeavors, I hope you achieve a lot of success there as well. Thank you for joining us. I wanted to ask you a little bit about the institutional investors being allowed to trade in commodity derivatives. What kind of an impact do you see on turnover in the next 1 year? What kind of participation do you expect? If you can just tell us, what the outlook is there.
Sure. So if you trace the history of institutional investors being allowed in this market, we started with the alternate investment funds category 3 about 1.5 years back. But that did not immediately take off because we had certain sort of impediments in terms of the custodial regulations. Those got corrected in December, and we now have mutual funds and portfolio managers being allowed. At MCX, and I think we have regularly maintained this in our dialogue with the media or even with our investors, that the impact of institutional investors is much more in terms of creating the width or the breadth of the market, not so much in terms of the turnover. Because, yes, you may have some funds which may come in with an active trading strategy, but we expect many more funds to offer commodities as an alternative investment class. And if that is what they're going to do, they will be in it for the long run, which really means that you expect them to sort of take longer term contracts. So for us at MCX, we are very excited with the fact that over the last couple of months, or I would say over the last 1 year, very healthy increase in the participation from the physical market, which is one side of the market. And if we now get the institutional investors who are again chasing longer term money and who have longer term deployment coming into the market, what this could mean is the beginning of sort of building up of depth in the third and the fourth contract in Indian exchanges, something that we have all wanted to do, something which is very critical for this market, and I think something which will happen now over the next 1 year.
Okay. Mr. Paranjape, does it happen right away that mutual funds will start participating? Does Sebi have to write new rules? Does it happen within existing funds? Will special funds be launched, will have to be launched, where investors are given the option that, part of it will be invested in commodities? I mean, just the roadmap from here to there.
So I think some of these are questions which we just have to wait to see what the regulations say. But suffice to say that, when we sort of changed the SCRA in 2015 in India, we introduced commodity derivatives as a security. Therefore, inherently, as long as you allow a mutual fund to invest in commodity derivatives as an asset class, you don't need too much of modification in terms of the inherent rules regulations. There will be a change in terms of the KIM of a lot of the mutual funds. I'm assuming that many of them will want to do it as a yield enhancer. Some of them may introduce it in their arbitrage funds. and some of them may also definitely get it in ETFs. From again, the way we have looked at the ones which make eminent sense, I think arbitrage funds and ETFs are the most likely and the first ones to come in. What we will need is some sort of a detailed circular, which will mainly come from the investment management division of Sebi, because the primary sort of decision of allowing mutual funds to invest into commodity derivatives is a decision now already taken by the commodity derivatives market division. So I think one part of Sebi has already made the decision. I think the detailed circular will need to come from the IMD. We expect ETFs and hybrid funds to be the first ones to take the benefit of this new initiative.
So what kind of growth should we expect to see in terms of volumes? I mean, you did mention that the interest would come in through, say, arbitrage funds, perhaps even ETFs, etc. But what are we looking at in terms of numbers?
If I may just add to it, I mean, what's for you in it for MCX investors? That's the question. I mean, in terms of earnings or EBITDA, what do they make?
Yeah. Sure. I think if you've seen what we've said over the last 1 year in terms of our investor communication, we've consistently maintained that a business like MCX, would anyways naturally grow at your nominal rate of GDP. But we have said that we think this business deserves to and will grow at 15 to 20% in terms of its revenue. That delta from the nominal to this sort of double that nominal number really comes from initiatives which are ticking in one by one. So I think last year, and when I say last year means this financial year, if we are seeing the numbers show a very healthy growth, it is thanks to the fact that the distribution has kicked in the way we thought after unification of licenses and with the advent of bank distribution. We believe that the mutual fund participation is the next pillar which will continue to fuel this growth. So I think from MCX perspective, people should expect that something which we have communicated to investors, that MCX will continue to grow at that 15-20% healthy growth in terms of its revenue will be maintained. Clearly, the benefits will come in terms of increased depth of participation. I keep saying this because it is something which gets underplayed when you are talking more of revenues and turnover. But what is extremely important is how much depth does your market have. Today, on our gold contract, we've gone from 7.5 metric tons to 25 metric tons in terms of open interest. And I wouldn't be surprised if we cross 30-35 metric tons soon when we have mutual funds, ETFs, etc. participating. So I think that's the sort of depth which allows any investor, whether he's a hedger or a trader, to come in at any kind of position on any side of the market. And that is what will bring back the investors who are trying to now hedge overseas as well. So I think we believe this will broaden the market. It will get people who are hedging internationally to come back into India. And more importantly, it will absolutely continue to help MCX maintain its trajectory of that 20% type of growth we've seen this year.
Sure. All right. We have run out of time, but thank you so much for joining us and all the best once again for your future endeavors.